So I had a few dips. One of the biggest dips, which seems far away and like nothing now, but it was a very significant one, was in the Gotham Partners days. And that was when I wrote, in this case, a white paper on, it was called Is MBIA AAA, where I questioned the AAA credit rating of a bond insurer. This is about 5 years in advance of the credit crisis. And then I found myself, never before had I taken on a politically powerful, influential, big company. And I found myself under the gun, ultimately under investigation by Elliot Spitzer. Then the SEC followed suit, and then all the negative headlines. And then we were forced to wind down Gotham. It was certainly, as the headlines at the time called it, a fall from grace. So that was, I would say, big challenge number one. I would say big challenge number two, business-wise, was certainly the period beginning late 2015 through late 2017. And then in the midst of that, ending a marriage. So I've had a few like that, but I've been very fortunate. None of these things are really catastrophic versus a serious, health challenge, which I've not had and hope to defer forever if I can.
You said before that success is defined by how you deal with the failure. When you look back to, say, that fall from grace, so to speak, with Gotham in that time, and 2015 to 2017 in that patch, when the war's in process, what do you tell yourself?
I tell myself to make progress every day. The advice I give friends who go through similarly challenging moments, and I guarantee you that, in life, it's the rare person that doesn't go through a very dark period, is, well, number one, adequate sleep, proper nutrition. Exercise is a huge help during, build muscle during those periods of time and get in really good shape, because that, I think, psychologically is a boost. Surround yourself with people who love you, and then make sure each day you make progress toward digging yourself out of the mess. And that kind of progress, physical, mental, business, compounds. And it compounds at a pretty high rate. And it's not long before you look back 60, 90, 120, 180 days, and you've made massive progress. And one of the great things about America is, I know you deal with lots of startups and venture capitalists, is that, failure is something that's can be, a lot of talented, some of the most successful investors in the world are ones that the first one didn't work, and that you can, there's plenty of capital available for people who are second-time founders, and the first one was not a successful exit. They quote unquote sold their company, but that might be slightly bad. That could mean they sold the furniture. It doesn't mean that Google bought them out at a 50x.
Bill, you and I are both tennis players. You're a set down, you're a breakdown. What do you tell yourself in that moment?
Don't let the past disrupt the future, right? Don't be upset that you double faulted, 30-40 at 4-5 in the set when you were up with 3, set points. Because that, if you just focus on that kind of stuff, it will distract you. And just, start with a blank sheet of paper. It's a new set, new opportunity, and rebuild from here.
So that's when the match is in progress. When the match is over, and say, Gotham's wound down, I've beaten you in a tennis game, which is very unlikely, but take a hypothetical scenario. Do you do a post-mortem process? How do you learn from that process? And what does that look like?
Sure. So I don't know if I do a formal post-mortem, but there were a lot of lessons learned about the structure of Gotham Partners, of our first fund, and I learned some pretty valuable lessons that remarkably weren't learned by others. So Gotham, we started out investing in liquid public securities, and then we went back to investors, and we got the mandate to invest up to a third of our portfolio in privates, venture capital, real estate, etc. And a structure, a so-called side pocket type structure that enabled that approach. And then inevitably the asset liability mismatch is what caused us to wind down, because we had a problem with where, I blame MBIA for intervening in a court case, but ultimately a merger that was critical to our success ended up getting held up on appeal, or held up by a judge, ultimately reversed on appeal, but that was sort of too late. And so the lesson from the Gotham experience was of the importance of liquidity, and that you shouldn't have an open-ended fund like a hedge fund where people can redeem capital and own liquid assets. And so we built Pershing Square to invest only in liquid large cap public companies, and it served us really well. Meanwhile, I've watched the rest of the industry, or many people in our industry, particularly in the last couple of years, suffer from precisely the same asset liability mismatch issues that we had back then. And so we did learn some pretty important and valuable lessons, but those lessons were not exported to the rest of the industry because people had to make the same mistakes we made. So I guess for me, I always like to say experience is making mistakes and learning from them. And I spend a lot of time learning from mistakes. We talk a lot at the firm, not just about things where we bought something and went down and we lost money. We talk as much about missed opportunity. A situation that, in light of our knowledge, experience, expertise, etc., that we should have exploited and made a fortune on. And perhaps we made only a small fortune, or made nothing because we didn't do the work. And so those kinds of mistakes can be, certainly in our business, as important. Missing Google can be as important a mistake, or maybe even a bigger mistake, if you will, than missing the next, like some other making a bad investment that doesn't work, I guess is my point.
Jason on your team told me about Coupang, so at least you hit some winners.
That's some good ones. We've had some very good ones.
You've had some very good ones. What was the most recent miss that you've debated as a team?
Well, at Pershing Square, Netflix. So we took about $1 billion position in Netflix after the stock fell about 50%. And then, we're a long-term investor, but we learned information within a few months of the initial investment, i.e. the next quarter's results, that caused us to question our entire thesis on the company. And we exited and promptly lost, $400 million, or something along those lines. So that was a more recent one. But I think what's not written about in our letters, but I consider, with respect to COVID, I had a very early view what the economic implications of COVID would be, or enough of an early view, month, 2 months, not more than that, that enabled us to make a fortune hedging COVID. I had a very similar view about interest rates, and we were completely ahead of the curve. And the mistake was not making that a bigger bet. We should have made $10 billion on hedging interest rate risk. Instead, we made $2.8 billion because we were a little timid. So some of the mistakes we've made, where we had a pretty, variant view that we were quite confident in, but we didn't put enough capital behind our confidence. So